AgriTalk is brought to you by Simplot Grower Solutions, a partner you can grow with. Learn more at simplotgrowersolutions.com. Wheat is in a month-long downtrend and looking at the December low for the next level of support. Corn and beans still locked in a sideways range, but man, today's low-range closes make those markets feel a bit heavy. But for the livestock markets, now there's some markets that are willing to rally. In fact, April hogs have gapped higher 3 days in a row.
Live from Thump Day afternoon via Farm Journal broadcast, this is AgriTalk. This afternoon, we'll talk with Dan Hueber from the Hueber Report. And right after the news, perspective from Oliver Slope of Blue Line Futures. I'm handsome newsman Davis Michelson. And now, the host of AgriTalk, Chip Flory.
All right, Davis. Yeah, thank you so much. It's report day. Should we get to some of those details?
Yeah, I almost said live from Hog Day afternoon. You know, like the Pacino movie?
Right. No.
But
I don't.
I went with Thump Day.
Thump Day.
Because it's Thursday. You see what I did?
Gotcha. Yeah.
Okay.
Yeah.
You got actual details for us? You got something to say?
I do.
Okay.
We got the quarterly hogs and pigs report that was just released, top of the hour. All hogs and pigs on March 1, 98% of year ago. Trade expected 100.1%. Kept for breeding, 97%. Trade expected 98.7%. Kept for marketing, 98%. Trade expected 100.2%. These are on the light side of expectations.
Like all of them, yeah.
Right. And even when you get into the pig crop, 99% versus 100.7% were the expectations. Get this, pigs per litter, 99%. Maybe I've just missed it, but I'm going to have to go back and look for the last time that the number of pigs per litter on average fell from a year ago.
Mm-hmm.
Because that's been a number that has just been marching higher. But we've talked about it a couple of times on the show, the PRRS that got into the farrowing houses. That created some big problems, and it's showing up here with the pigs per litter coming in below a year ago. Farrowings for February, 99%. Farrowing intentions for March, May, 97%. Trade expected 99.2%. And farrowing intentions for June, August, 98%. Trade expected 99.7%. So the forward-looking, the crystal ball numbers are below expectations as well. Yeah,
you know, it's
the way this market's been trading.
Yeah,
maybe it's got it factored in, but I don't know.
Well, and it's one thing for there to be a miss or to come in a little light on, you know, this or that, but
yeah,
it sounds like it's across the board. Am I hearing that right?
Yeah, it is. It is.
Right down to pigs per litter.
I don't see a number that topped trade expectations. There was a revision to the December all hogs and pigs. It was revised 0.2%. So I don't know. They're all pretty light. Let's get to the closes.
Yeah, sure thing. Well, export sales of wheat in the week ended March 18 totaled just over 414,000 metric tons, 344,000 sold for old crop, 71,000 for new crop. Both tallies lined up with trade expectations. Improved soil moisture levels in the central and southern plains moved back into the focus of wheat traders today, sending prices lower. July soft red opened fractionally higher, but spent most of the session back below last week's low. New crop wheat is at the lowest level of the year. On today's close, July hard red wheat 9 1/4 cents lower today, $5.73. July soft red off 10 1/4, $6.08.5. September spring wheat 8 1/4 cents lower, $6.34.5.
It's a month-long downtrend, and it feels like it is accelerating after today's trade.
Corn export sales in the week ended March 18 totaled just over 4.6 million metric tons, 4.5 million for delivery in the current marketing year. The sales tally was right at the top of the list of lofty trade expectations USDA this morning also announced the sale of 111,000 metric tons of old crop corn to Japan. Strong demand, however, was not enough to offset spillover pressure from wheat and soybean prices. That pulled corn futures through support at short-term moving averages. May corn futures 6 3/4 lower, 546.5. July off 4 3/4, 532.5. December corn closed at 465.5, down 3.5 cents. Chip.
Yeah, we're knocking on the door of support. I wouldn't say that we've done a full test of support in the corn market yet, but we have fallen below some of those shorter term, the 20-day moving average. So that could make for a rough end of the week.
Old crop export sales of nearly 102,000 metric tons were at the low end of trade expectations, and new crop sales totaled 65,000 metric tons. Egypt, the biggest buyer of old crop beans and unknown destinations, was in on the new crop business. Bean oil futures were sharply lower, and meal prices worked to the upside as traders covered long oil short meal spreads. The pressure on oil futures turned into spillover pressure on soybean prices. May bean futures 18.5 cents lower, 14.14 1/4. July beans dropped 16.5 to 14.04 1/2. Novi beans 12.14 3/4 at the close, down 13.5. Chip.
Yeah, Brian Grady said it this morning in Markets Now in the first hour of AgriTalk. It's an oil market right now, and oil puked.
Old crop cotton export sales totaled 271,200 running bales, with new crop sales reported at 69,400 bales. That turned out to be very, very disappointing to the market, sending prices sharply lower. May cotton down the 4-cent limit, 78.44. D's cotton dropped 382 points, 76.56. Beef sales were good at 18,900 metric tons. That helped futures push to the upside. Cash bids up $1 to $2 this week. April live cattle 42.5 higher, 119.55. June up 77.5, 121.07.5. April feeders 177.5 higher at 144.22.5. And finally, pork export sales down slightly from last week, still totaled an impressive 38,700 tons. April lean hogs $1.90 higher, 99.67.5. June jumped 127.5, 103.32.5. Chip.
Let's get some perspective on what's going on in that hog market. Oliver Slope, Blue Line Futures. How you doing, Oliver?
I'm doing good. It has been a wild week, that's for sure. A little something for everybody.
No doubt about it, including 3 gaps in a row to the upside in April hogs. Dude, this has got to be heading for some sort of a blow-off top, isn't it?
I mean, that's what I've kind of been hoping for, to see one. But these things can outlive themselves and overshoot fair value, and they often do. So although it's tempting to say, oh, my gosh, the market's overbought, this is like hogs and wheat go hand in hand, where you just don't step in front of that speeding train, So
That's right.
It's more
more
of a process than a point. At some point, I think there will be some good opportunities on the short side, but mostly a spectator for now. We just had the quarterly hogs and pigs report. That looks like it might be a little bit friendly, so I wouldn't be surprised to see a little bit more momentum here to wrap up the week.
Very good. I'm a little concerned about the momentum in this corn market. Closed below some shorter-term moving averages today.
Yeah, it wasn't the greatest session, but it wasn't the worst either. I mean, if you look at where we've been trading the last 2 months, we've basically just been range-bound. We've got April options expiration tomorrow, a lot of open interest at 550, so wouldn't be surprised to see that be a little bit of a magnet. And then, once we kill all those options, we'll move into next week, and we've got a big end of the month USDA report. And I think that'll be the catalyst to give us new direction in both corn and soybeans, which is mostly been range-bound. Beans, obviously, down almost 20 cents, but we're right back where we finished last week, so no big deal.
Isn't that crazy? Yeah. Like you said, it's been an eventful week already, and we're going to go charging into the end of the week. Thanks, buddy. Appreciate it. All right, that is Oliver Slope, Blue Line Futures. When we come back, Dan Hueber from Redding Hueber Ag Consulting, set and ready to go right here on AgriTalk.
Farming in the 21st century requires data-driven technology and product decisions that are rooted in on-the-ground insights. At Simplot Grower Solutions, we're in your fields and by your side to help you grow yields and profits. Simplot is a pioneer and innovator in plant nutrition and agronomic science. Our local experts offer grounded advice to help you get the most out of every acre. Go to SimplotGrowerSolutions.com to see how we can be your one-stop resource. Simplot Grower Solutions, a partner you can grow with.
Never miss a story. Text news to 31313 to have today's top stories delivered to your phone.
Davis,
Chip?
we are into our second hour of AgriTalk today, and I feel like the day's really just getting a good start.
We had a
Because
great
at
show this morning.
3:15,
Yes.
at 3:15 this afternoon, we are
Mhm.
going to do a Facebook Live event. It seems kind of weird to me, but it's very cool. I'm looking forward to it. It's a live chat. I don't know if I've ever done one of these before.
You must have taken your afternoon nap before the show today, then? Is that how that works? Because you sound very chipper, very spry.
Well, I've had my calf perk. I'm ready to
Okay.
go.
Oh,
Yeah.
there you go.
Yeah, you
Is
see,
there
I made
anything
that calf perk
can't do?
gravy.
Yeah.
I made the calf
Oh,
perk gravy.
yeah.
Yeah.
Look at you blazing new trails. Proud of you. I'm proud of you.
Just so everybody knows, calf perk is not approved for human consumption.
That's right. We kid. We kid. Don't eat it.
That's right.
Don't eat
That's
it. Your
right.
calves should, but you shouldn't.
Of course, Tide Pods aren't either, so, you know.
There's an element of natural selection in this sort of thing, if you ask me. I'm no Darwinist, but I'll give him that. Facebook / what is it? AgriTalk.com. 3:15 today. You can hear all of Chip's thoughts. If you haven't gotten enough, which I never do, I never feel like I've gotten enough Chip. You can tune into the to the Facebook machine.
Facebook.com/AgriTalk.
Facebook.ag/
No.
what?
No.
What was it?
No.
Agbook.
No.
What?
Buzz yourself first. There you go.
Facebook.com/AgriTalk.
There it is.
That's where you want to go. 3:15 this afternoon, and
Right
we'll
after the
have
show.
a conversation about the Prospective Plantings Report. And
You're gonna love
right now, I'm going to gather some intel for that conversation from Dan Huber. Love it, from Redding Huber Ag Consulting. Dan, how are you doing?
I'm wonderful. How are you today?
Doing just fine.
Great. Of course, David said you were chipper. I mean, how could somebody named Chip not be chipper?
How could he not be? I thought that too when it came out.
You don't need to answer. Yes, exactly.
Right. You could ask my immediate family if that is the case all the time, and I think they could shed some light on that for you.
We know, we all know how families exaggerate things. So I don't know if I believe them or not. So yeah.
That's right. Dan, the Hogs and Pigs report just out. Did you get a chance to take a look at
Absolutely.
it? What'd you think?
Yes, I did. Certainly, I mean, good numbers all the way around, and we know ways of denying it. And, I guess kind of validates, I should say, let's speak properly here, validates what we've been seeing in the hog market. I mean, not that this is the only reason, but, so often, price action tells us something long before we get the actual news.
Yep.
And sometimes we don't know what that news is going to be. But, granted, the hog market's been rallying for a year, but it's been these last 3 months that we really see things accelerate. And, of course, you add in the unknown as far as what's going on with China with the African swine fever at this point, and, really kind of explains, what we have witnessed here. June hogs, moving from just over 80 cents at the beginning of the year to, pushing 104. It's, nothing short of phenomenal. And again, I think these numbers come back and tell us what happened, or tell us what is happening underneath the surface. That said, boy, this, we'll see what tomorrow brings, but I mean, this is almost that classic setup for a great news. Finally, gave us validation of why we're doing it. Boy, is that the end of the run? So we'll find out more by the close tomorrow. But keeping in mind that just looking at June hogs, we in the history of the June contract, we've only spent 4 months above 104, and they were all back in that 2014 period.
Really?
So, we're into pretty thin air in the atmosphere here. So it's no time to fall asleep at the wheel. So.
Well, That's the point that I was making when I was talking with Oliver. The kind of price action that we're seeing now, the April contract is gapped higher 3 days in a row, filled the gap back on Tuesday before it rallied up and closed on session highs. Session low open, session high closed the last yesterday. Session high closed today. It's set up for another gap higher, and I don't know if this would be the breakaway, the measuring, the exhaustion. I don't know what gap it would be, Dan. It's incredible what's going on.
Yeah. And again, we always the old rule of thumb is you take 3 gaps to a top, and of course that third gap is then once you fill that one, there's your blow off, there's your exhaustion. So yeah, and again, I guess we just gotta kind of let the market tell us tomorrow. But boy, what and gosh, look at where we were a year ago at this point. $50, $40 hogs.
I mean, know it.
Like I say, just nothing short of phenomenal. So
right. The pigs per litter, 99% a year ago. Does that raise your eyebrows?
It does. But I think you hit it on the head earlier. I think there was probably a little bigger health problem out there than anybody really wanted to recognize. And certainly it's not because we haven't been doing our best to keep up on the best genetics that are out there on a worldwide basis. But yeah, I think that's just a telltale sign of some of the problems they had health wise here in the last year.
All right, so don't fall asleep on hogs. Get ready to put some hedges in place and do some downside risk management. Is that what I'm hearing?
Absolutely.
Okay.
It's a huge. If it puts, granted, the volatility is going to be up there. They're going to be pricey, but then again, look at what you're locking in. These are some levels that we haven't. Like I say, very few times in history have been able to lock in these kind of values.
Right. Okay. Cash cattle market finally got away from 114, trading 115, 115.50 is my take on it. And the front month contract is trying to maintain a premium here. I'm getting more impressed with the cattle market every day.
And again, I guess certainly can't fault the way it's acted. We try to break it and then it snaps back again. So, April, after a nice correction, looks like it's kind of rounding the corner and turning back up. So, yeah, I do think, seasonally we probably got a little wind at our tails here. We could push it back up. Do I think we're going to get carried away? Boy, part of that's going to be tied to the hogs. If the hogs do finally exhaust, it's going to be tough to push the cattle too much further in face of that. But I think over the near term, it certainly would not be unrealistic to be looking at those April futures back up in the 121, 122 area just on a technical rebound. So yes, I think at least the short-term 30-day, 45-day picture it looks pretty positive here right now.
Yeah, and the demand, Dan, I think the pent-up desire to get out and socialize and dine in a restaurant, I think it's real, isn't it?
Yeah. You just we noted a couple of weeks ago, a lot of our restaurants or things kind of opened up here a little bit more in Illinois. So I went downtown and just to pick up some food and bring it back home. But I was stunned. Again, we're in a small community, but I went downtown and every parking lot was full. There were people waiting in line at restaurants, and granted, they're reduced capacity, but regardless, yes, the weather was better, but I think people just so much want to get out and have somebody else do the cooking for them. They're tired of the same old thing that they didn't really learn all that many new recipes, and the bread they were making wasn't all that good. So it's great to get out and have somebody else do it for you. So it's are we going to go back to where we were? We can't for a while, but in the same token, boy, it's certainly a positive thing to be able to see life return to some semblance of normalcy again.
Yeah, but that base, the demand base that we built in there now at the retail level and consumers' willingness to cook at home, like I said, I think that's our base. If we can add on now with restaurant dining, Dan, I kind of like this market. I'm optimistic here. Yeah.
So I think particularly when you get into the summer months, when we know we're going to see the grills start to fire up here again, that certainly has got to be a positive. That said, if we're going back to the restaurant, we're probably not going to be seeing the demand at the retail counter. So there's give and take in that situation, but overall, like particularly when you see the economic signs looking a little bit more positive here at this point in time, I really like the looks of that. Where I probably draw hesitation on cattle and hogs both is, I think we could start seeing a little suffering, particularly if the dollar continues to climb a little bit of problem in the export market. Granted, 10,000 metric ton of hogs again last week. I mean, certainly nothing to shake a stick at. But, cattle export numbers were not all that substantial or not all that great. So, again, again, there's a big if in there. If the dollar continues to climb, that could start creating some headwinds there.
Right. Give me 20 seconds on what you think the dollar is going to do.
20 seconds, I'm bullish on the dollar. I think for several months here, well, really since the end of last year, it's positioning itself to turn higher, and I think today we pushed up to the highest point we have yet this year. So, not that we're going to go back to where we were 2 years ago necessarily, but I think we're generally going to work higher this year.
Gotcha. All right, we're talking with Dan Hueber, Redding Hueber Ag Consulting. When we come back, we've got some reports coming next week. We got to talk about what's going on in this grain market. The wheat market feels like it's just blah. But is that going to be an anchor on beans, on corn? We'll discuss next. It's time for Headline News, featuring some of the headlines ripped from Pro Farmer's First Thing Today. The head of Mexican Farm Group says the government's corn crop estimate is inflated. Russian consultancy ICAR raises its Russian wheat production and export outlooks. Heavy rains and flooding could set the stage for another big Australian wheat crop. Higher wheat quality could boost French wheat exports to China. What's driving the surge in illegal immigration across the southern U.S. border? According to the Wall Street Journal, it is men looking for work. The administration and groups urged the Supreme Court to uphold the decision on refinery exemptions. And Vilsack says China's ASF troubles remain despite assurances from China. There's a lot on the agenda happening out there right now. Just give it a look at Pro Farmer. Make that try, profarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation.
You can also tweet at us. Just include hashtag AgriTalk in the tweet. That way I'll be sure to see it. Okay? We are talking with Dan Hueber from Redding Hueber today. Before we get back to that, let's go ahead and recap how the market's closed.
Chip, July hard red winter wheat 9 1/4 cents lower today, 573. September spring wheat 8 1/4 cents lower, 634.5. May corn futures 6 3/4 cents lower, 546.5. December corn closed at 465.5, down 3.5 cents on the day. May bean futures 18 1/2 cents lower, Chip 14.14 1/4. Novi beans closed at 12.14 3/4, down 13.5. May cotton down the 4-cent limit, 78.44. Hung a 7 handle on the May cotton. April live cattle 42.5 cents higher, 119.55. April feeders up $1.77 1/2, 142.22.5. And April lean hogs stormed $1.90 higher, 99.67 1/2. That is your quick market recap. Now, back to you.
Thank you. All right. Dan Hueber from Redding Hueber is our guest today. Dan, the market that really stands out today, well, bean oil stands out big time, but so did that cotton market. Sure. Limit down.
Definitely.
What happened there?
A combination of factors, I'm sure. One, export sales were less than desired, down 38% over the last week. I mean, overall, I guess they were disastrous, but I mean, that probably, is suggesting a little bit of waning in the demand there. And I think it's, here, as with so many commodity markets, I mean, you're looking at a market that's been higher for nearly a calendar year now. And I think extremely overbought. We're looking for news. The weather is certainly nothing threatening at this point yet. So we're probably going to see some pretty good activity on planting in the South and in California and states like that. And I think we tipped it over on the technical side. I think you finally took out some of the early March, late February lows, and I think it just ran the sell stops, and we've got probably far too many longs in that market for the time being, and I think it's just kind of a house cleaning at this point in time.
Okay. All right. Very good. What happened in bean oil? Same kind of story?
Oh, absolutely. You know,
Yeah.
and take a step further in the bean oil, look what happened to the crude. You know, and again, the crude, you know, there was a little bounce in crude yesterday because of, you know, the traffic jam over the Suez Canal and some of those issues on transportation. But, you know, the crude oil for the last several weeks now has been showing signs of a peak. And this even without OPEC increasing production. So we probably just got ahead of ourselves, and that was a lot of the driver in that bean oil market was the biofuel. And I think with crude oil backing the way it did on the world markets, you know, that just took a lot of the air out of the sales there for the bean oil as well. And you know, no two ways about it, very overbought market and it needed a technical correction as well.
Right. Is that boat still jammed in the canal over there?
The last I heard, yes. Yes, I was thinking about, you know, maybe trying to get a group together. We can all go over and help push, but it's, you know, I haven't got anybody to jump on board with me yet. So no pun.
Yeah, let's see. Yeah, it's still stuck. I just put a Google on it to see what's going on there. I
read it could
amazing.
it could be Tuesday because they're waiting on the tides to hit just right to be at their highest point.
Sure. Yeah.
Before they can
And
dislodge
I think what some of the concerns is, I guess, you know, the boats that are backed up behind it are carrying perishables and things. So, yeah, this is, you know, granted that that's not a very big street in my understanding. So it's probably when something blocks it up, but there's a lot of traffic through there. So what a mess.
That's right. That if I read right, I think that boat is like 400 meters long.
Oh yeah, one of the largest over there, right? I mean, the ships through that area. Yes.
Huge, it's crazy. It's absolutely crazy. Your take on the wheat market, Dan? Is it as bad as it looks and feels right now?
You know, I think the wheat, of course, has never had a. I don't want to say it doesn't have a friendly story, but on the same token, it's never to the extent of corn or beans. You know, part of it's seasonal. You know, it gets a little more difficult. We're not killing it with a winter kill. You know, there's just not much between now and new crop that's supportive of the wheat on a seasonal basis. No, I don't think it's a wipeout by any stretch of the imagination. And I think, you know, wheat is probably going to find additional demand, you know, worldwide. In fact, the USDA already bumped up the wheat feed usage categories on the world numbers. So I think it's probably the other way. It's going to keep corn somewhat in check because, you know, in so many points in the world, so many places in the world, you know, they're just as happy to feed wheat, maybe happier to feed wheat than they are corn. So, but yes, I mean, I think we're probably overdoing it to the downside at this point in time. You know, I think soon due for a rebound, but, you know, here again, the actual peak in the wheat market, I don't know if we're going to go back and revisit that here for any time in the near future.
Okay. On to corn and soybeans here. We've got big reports coming next week, trendsetters.
Yes.
What's your take? What's your thinking going into those reports?
Well, you know, realistically, I guess two things about them. One, of course, we don't know exactly what the reports will say, but we do know it's kind of a transitional point in the market, you know, regardless of what it says. You know, once you get past this acreage number, of course, on a lot of individuals or a lot of people in the trade, we'll take this as the gospel truth. You know, this is what's going to get planted, so we're going to adjust all of our numbers accordingly. And then we start thinking about weather. So unless you get a weather problem, it's kind of tough to keep markets sustained at that point in time. But yeah, I did see some planning, some intentions estimates came out this afternoon. I don't know if I should mention other news sources, but they're
go for it.
Bloom, but they came up with a 93.1 corn and 90.1 on the beans. So about where the USDA was in February on the beans, 1 million acres higher. So, you know, I would tend to say if that average was correct, you know, we don't have a whole lot of reason to push prices higher. And you know, and I think that's kind of what the market's been telling us for weeks here. You know, unless there's a surprise less than that, you know, particularly if we were, you know, 88 million acres, for example, on soybeans, that would probably really shore up the bean market. But boy, you mean this market just just acts tired. We've been up on this news for weeks and weeks and months, I guess, realistically, and without something fresh. And again, like I say, those numbers, if they came out at that, I think those figures are that kind of bullish yeast is very well needed into the dough, and it doesn't take us higher. It at best keeps us the same, and I think as much more probably a risk of a little correction into the spring.
Okay, the quarterly grain stocks report.
Yes.
I'm going to be watching that soybean number very, very closely. Did Bloomberg put out the grain stocks survey?
Yeah.
What they get on
average estimate 1.537.
Okay.
So
and
of course which would compare to a year ago 2.255. So 700 million bushels less. So,
right.
I don't know if that number in itself scares us. When you've already, what is our usage going to be for the next, several months of the year? I mean, granted, we have already shipped 96% of our commitments on the sales. That said, China shipped 88% of the full year estimate. But that said, we know over the next 2 to 3 months, the lion's share of the export business is going to move to South America. So, but any way you cut it, boy, it's hard to paint any kind of a really bearish picture on the soybeans at this point until we can get the acreage out there and get a new crop pretty well sealed in. So
yeah, it is. How much movement do you need away from that 1.537 billion bushels for March 1 bean stocks? How much movement do you need in either direction to get the market to react? Is it a 10 million number? Is it a 20, 30 million number away from that?
I would say if you put it a 4 in front of it, you would start getting 1.49. Anything less than 1.5, then you probably start getting. And granted, I see the low estimate was 1.44. Just kind of looking through there, that one kind of stands out as an outlier. So I would say anything less than the 1.5 category, then you're probably going to put a little fire back into the market.
Yeah. And the odds of getting something in the 1.56, if it would come in above that, it would imply that the bean crop from 2020 was bigger than what has been estimated by USDA, and that might make for a bit of a tough slog in that bean market for a bit.
Sure. Well, and again, like I say, I think this market is desperately in need of something. The bulls especially are desperately in need of something positive.
Right.
And and if they don't get it, if they get something even remotely to the high side, I think you could see, granted, looking at the number of people that are already long in this market, you could see a number of them head for the sidelines just to take a rest, or as I've commented on some previous newsletters, there's always a greener pasture out there, and if they start seeing a greener pasture somewhere else, that money may exit the grains and the soy and start looking somewhere else.
Okay, 30 seconds left here, Dan. Do you still like the corn market?
I do. Again, I think the corn market probably is cyclically. I show the corn market, finding a peak here at the end of March. Not long term. I mean, that could be something that just gives us a correction into the summer months, and then we'll get the weather excitement to come back with us. And if I look out into 2022, corn and beans both. I don't see how we can correct the supply situation we have in one crop year. It's going to take two. So that tends to say that we've got 18 to 24 months ahead of us that are still going to be pretty good.
Excellent. Good work, Dan. I appreciate you, man.
Oh, always a pleasure to be here. Thanks.
Excellent. That is Dan Hueber, Redding Hueber Ag Consulting, the Hueber Report. Davis and I will be back. Wrap things up here in just a moment.
In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk.
Did you lose track of the time there, Davis?
Did I?
Yeah.
I don't know. I've got a watch on.
Do you?
Yeah.
Yeah, I've got the atomic clock of Boulder, Colorado, up and running right in front of me.
Really? Why would you make a clock out of a boulder when there's so many other more suitable materials?
I hear you. I
don't
hear
get it.
you, man.
I don't get it.
I hear you. Welcome back. I'm Chip. That's Davis.
Yes.
Great conversation with Dan Hueber.
Mm-hmm.
The Hogs and Pigs report was out at the top of the hour. I want to remind everybody of that. The numbers came in on the light side of trade expectations. Kept for breeding, the breeding herd is off 3% from year-ago levels. Trade expected a 2.3, make that a 1.3% decline. So, I mean, we like doubled it up on the on what the trade expected as far as the decline from year ago in the breeding herd. Kept for marketing number was expected to be basically steady with year ago. 100.2% was the average trade guess. The range on that was 99.2 to 101.6, and it came in at 98. So we had the all hogs and pigs on March 1, the kept for breeding number, and the kept for marketing number all came in below the lowest pre-report trade guess. The kept for marketing number is a full point below the lowest pre-report trade guess. Dan made some really insightful comments about how, maybe this hog market has been telling us that this was coming for quite some time. And that's the risk in the market, Davis, is that, yes, the market has already anticipated this, already built it in. I mean, I know I'm talking like Bubba. The market knew it was coming, Davis. Come on.
Sure.
Come on, baby.
Yeah.
So that is the risk, though, that this has all been built in. What might be really disappointing for a setup, because we did close near session highs, it should be fairly simple to get another gap up tomorrow morning when the market's open. But if you push it up to a new contract high and then fail, that would heighten my concern that maybe we've put a short term. A lot of times, I don't care if we're talking about livestock markets or grain markets. A bull market will end on bullish news. A bear market will end on bearish news. And the persistence of this hog market, I think, has put it into the category that it'll probably end on bullish news. Not calling a top. That's not what I'm doing. I'm just saying, if you don't have any hedge protection on, if you don't have any risk management on, you might want to take a look at getting something done.
Now, this is interesting because yesterday, it feels like Mike Mock was expressing similar sentiments in the corn and bean markets.
He was, yeah.
And now here we are talking the same way about the hog market.
And Mike was talking about it for similar reasons. It's the seasonality of it all. What more are you going to give this corn market? What more are you going to give the bean market than what they've already gotten to drive that next leg to the upside? That's the big concern. Now, Mike yesterday was saying, give me a 89.999999 million acre bean planting estimate, and that probably is psychologically supportive enough that bean market might make one last effort to try to get some acres. And then we get the Bloomberg number comes in right over 90 at 90.1 million. So maybe it's got to be closer to 88, an 88 handle instead of an 89 handle to get that kind of a reaction. I don't know. But the Bloomberg combined number, let's see, I thought I wrote them down. Yeah, 93.1 on corn, 90.1 on soybeans is what we got from Dan. That's an 83.2, 183.2.
Yeah.
I was kind of thinking the over-under line, and I've talked about this before. The over-under line is 182 million on the combined plantings estimates for the prospective plantings report. But maybe move it up to 183 is what this is telling us. Interesting.
I don't know if we can call the flip in attitudes from bullish to bearish just yet.
I don't feel that.
But as much as I keep hearing, boy, you better get some protection on there. Boy, you better be ready. Because when she drops, that's all she wrote.
Yep. Yeah.
And
that's right.
And you're right. Nobody's full on bearish. Nobody seems to be bald-facedly negative the markets. Right.
Nobody's ringing a bell. Yeah.
And yet, it almost feels like they're holding the bell just in case.
Love it.
Am I right?
They got a hold of the rope, getting ready to pull the rope.
Holding the rope.
Yep. 400 meters long is the Ever Given.
Yeah.
400 meters long, 59 meters wide. Keep in mind, people, there's 1,609 meters in a mile. So this thing is a quarter of a mile long.
Yeah, it's humongous.
It can hold 20,388 20 by 8 foot by 8 foot containers. 20,388. There's there's an image on one of the Google searches that I did. If you would stand this thing on end, it's the Empire State Building.
I was reading this morning. It may become a bigger problem as we go. We may be seeing more and more of this as those shipping freighters or whatever you call them, the barges, whatever, boats.
Yeah.
They just continue to get bigger and bigger and bigger.
Yeah, exactly. We're getting there. It's looking to me like we're going to get that running start to the planting season. Below normal precipitation in the 6 to 10 day and the 8 to 14 day. Hey, we got about 15 minutes, and we're going to be live at Facebook.com/AgriTalk. Live chat coming up on the Prospective Plantings Report and the Quarterly Grain Stocks Report. Love to see you over there. Join us tomorrow morning. Free for all. Wiesmeyer, Haney, and Mark Recker right here on AgriTalk.